Hi and welcome to the Market Alert for Wednesday the 3rd of February 2020. So yesterday we saw the future surge above 3,800. That's on the S&P. A short squeeze fizzles, attention turns to stimulus. Well, what a surprise, eh? As I've said before, if you're going to take on the big boys, you've got to make sure you've got very deep pockets because they have limitless amounts of money. They can print money out of fresh air and put it in the market. That's what we've seen for the last 13 years. And that's why we have seen this short squeeze fizzle, because it doesn't take a lot to actually destroy it. So, if you have the facility to print money out of fresh air, feed it through the primary banks in bonds, and then into the stock market with M2 and M1, then mission accomplished. And that's what we're seeing there. And this is what the market's been waiting for. Uncle Joe to print some more money, and he's going to. We know this. We've seen it before. And unfortunately, if you're going to take on the big guys, you've got to do it a bit more covertly than what we've seen over the last few days. Implied volatility reflecting this as well, as it dropped down to 1931. Again, you can see we've had a small correction in the market and now back to the 20-bar moving average, and also switched to amber. So the market's free to move to the upside now. As news of stimulus, more money coming, more money printing. That's how it works. Keep the banks going, keep the illusion alive of the whole charade that we've had for the last 13 years. So let's have a look at the stock markets, whichever one comes up first. That's silver. We'll come back to that. And let me just bring these into the right place here so that you can see the chart. So this is Wall Street yesterday, straight up on fresh air. Doesn't matter about that. Just mark the stocks up and bring the market back to the 20-bar moving average that we spoke about yesterday, 62.78, and that's precisely what they managed to achieve with the Dow. And then in the Dax, we've got the same thing. Again, let me just bring this in so that you can see it. We see prices trading up to the 62.78, and then we have also had the double one, which we have there as well. So you can see exactly where we said yesterday the market was likely to go to, and that's where it went. And also on fresh air, not a huge volume compared to the previous day, but it doesn't have to be. All they have to do is mark the stocks up. So the market makers just moving prices to the upside there. So let's go back to the DAX. I was just doing a bit of arranging there as it was distracting me. We'll go back to the DAX and have a look at the 2-minute chart. Overnight, we can see that prices are at the previous day's high there. They've been sent lower from this point, which we can see. They've been sitting on the 200 MA. Traded below it and now back above it. So first kick off this morning in the futures market up to the high. I would imagine is going to be the objective there at 7 a.m. It's currently 6:40 as I'm recording this. So that's where the DAX is going to go. Let's have a look at the bigger picture though, just to see if prices don't and they want to come in and sell this, then it's down to the DP level. And then down to S1 on the downside as well. But for me, I would think that we're going to continue to move to the upside because they haven't finished hammering silver yet. Again, just to really crush those Reddit traders. So let's have a look through yesterday's price action quickly, because I want to get onto silver. So you can see yesterday morning as well, the futures market, they got it above the high, and then it was a matter of just moving prices to the upside, which is what we see here. It was a bit of a battle to begin with, but the market's already, it comes down and tests here. You got massive volume, closes back above the 200, closes above the 20, closes above the BRN, closes above the 5-bar, and then we're off. So prices then moving up and up to the next BRN, then the R1. Let me just wind this back a minute because I had there's a flash there, just having a look to see. Yeah, so we'd already taken off above the 38, and then There we go. So we're just at 62 as we got to the R1, which I pointed out yesterday. And you can see how they stopped it here with some selling at this level as well. So I'm going to wind on there. So they decided to take profits. And I'm just going to come back. I just spotted something. Just want to make sure. No, it's not what I thought it was. So then I drew in some fibs just to see if the market was going to stop. It did. It stopped at 62. And then I drew some fibs from the downside there. And the market came back to 89. And as we move forward, you can see there was a double bottom there. A bit of an increase in volume as well. But sitting on that 20 bar moving average. And one red bar. And then we had a bit of a sideways move. There is a pattern here that after 8:30 prices will trade sideways. We did have a potential buy signal, and then they decided to, no, we can't move up until we've had a shakeout in this market. We need a shakeout. We've just had profit taking, but we've got to make sure nobody else wants to sell. So the long side is taken out. The short side was very quick, spike down, get the increase in volume. Prices come off the lows and above the BRN, and then the market is free to move. So we've got no more selling, and we know we've got no more selling because, as we saw in the daily chart where they can mark prices up, they did exactly that here, and then we're off. No volume required, as they say. There's some selling pressure here though at the 20 bar moving average, but prices absorb this and then just drive higher with new buying back up to the R1 there, and you'll see prices then stop it once more, sit at the R1 because that's the 62% retracement in the daily chart, and prices just sit there for a while, as you'll see, and then we have another potential buy signal, and it doesn't do anything with that one, just stays sideways. And then in the afternoon, you can see prices have traded down from the R1, sitting on the BRN. They're also below the 200 MA as well. So we had a bit of a switch from profit taking mid-morning, and then prices once again start to move to the upside. The Dow was moving strongly. It moved up 200 points by this point that the Dow had moved barely 30 points. But there you can still see we're back at that 62% retracement, trying to move prices up. Again, it's a resistance area. It was in the morning session, but they're doing their best to move it, and they continue until the market comes back to it. Got a bit of resistance there. Then we had another potential buy signal. The market moving up with the scalp at the resistance to the left. The ideal place to consider profits there. I wasn't at the desk at the time, which is why the line still remained and it wasn't redrawn, which you can see there. And then you see the selling coming into the market. Huge volume there, alerting to you that the pros had had enough at that point. And then it trades sideways, right back to the 20 bar moving average. The volume declines, and then the market back to where the resistance and the selling was, which you'll see there. And then eventually it manages to break through, and in the daily chart the market eventually moving up to the 78% retracement that was set yesterday morning. So let's move on and have a look at silver, and we'll start off with this Reddit trader Deep Effing Value. I think that's his name, or what he uses online, unless he is known by that now. Loses 19 million in 2 days as he holds on to GameStop stock. What an absolute plonker. Why would you? When the hedge fund had already pushed the price down to what was deemed a fair value for the actual stock, they ramp it up. If you've made, I don't know how much he made if he's lost 19 million in 2 days, but that's just greed. Absolute greed. So he deserves what he gets taking on the big banks. If you're not going to take the money in a situation where you've gone from $2.40 all the way up to $565, well, too bad, because a lot of people are going to take the money, then you're going to be left holding the baby, and that's precisely what's happened. Other news is US Mint warns that it can't meet surging demand for silver and gold. Now, this is, as I said yesterday and on Monday, this is how you should play the silver market. And that's to buy the physical and sit on it, put it in a safe place and leave it there. And if everybody kept doing this, then the banks would be screwed. Now, I think it's David Morgan that said if every US citizen owned literally just 4 ounces of gold, it would destroy the banks. And here's a man who's been in the silver market, as I've said before, about 40 years, written extensively about the silver market and the manipulation. And that's the key to this. And they should have done it covertly on Reddit or everywhere else, and we wouldn't be in the situation that we're seeing with silver during yesterday. Because, as I said yesterday morning, they're going to get crushed because that's how it works. And you can see here, this is a news item that's made the headlines yesterday. Catalytic converter theft erupts across country. Now, I have connections with scrap merchants, shall we say, and they for months have been buying all sorts of metal processing to retrieve silver because they can see it's so undervalued as well, to actually extract the silver from catalytic converters and also any electrical goods as well. So, yeah, no surprise to see this in America at the moment until it catches on here. I mean, nothing like advertising the potential money-making schemers are in the news for those who have a penchant for nicking such things and cutting them up and then taking the silver out. We saw this many years ago with copper, didn't we, when electrical cables were being stripped on railway lines and things, and a few people losing their lives as a result, not realising that it's the best conductor of electricity. But that's the way to have played this. They should have kept quiet and accumulated all the physical silver that was around, but they didn't, and as a result, as I said yesterday, they would get monkey hammered, and that's precisely what happened. I said they'd filled the gap, and then they continued to fill the gap, and they took it all the way down to 62% from the recent low to the $30 high. And I think it's still got further to go to the downside. I wouldn't be at all surprised if we don't go back down to the 50 bar moving average, because that's the one that they like to take it back to. As you'll see here, before we had 3 attempts down at this level, and that's likely to be the area where it stops. I could be wrong, and I don't mind if I am, because I am long spread bets, as you know, on this, and yesterday I saw it reduced by £500. I'm not bothered. I'm down in this market at $13 an ounce, which is 50% lower than where we're currently trading, so not too bothered about that long-term trade. But yeah, so I wouldn't be at all surprised if they don't come back down to these sorts of levels, to be honest with you. And the question that I keep getting asked, and I've been for years, is when is the silver price going to go up? And the answer is really, really simple, and that's when they allow it. And that's the same for the stock market. When is it going to go down? When they allow it. And until then, you have to have patience. If you're a holder of physical silver, which I am, I've said before, then you just have to sit on it. It's a long-term insurance plan for when the banks eventually can no longer be funded by the Federal Reserve because they can't service the interest on the debt, or they reset the price of gold and silver, which is my original reason for buying, because at some point, as they've done in history, they're going to reset to get rid of the debt or to offset at least a majority of it, and the price of gold will be used for this, of which silver will follow suit accordingly. And that was my reason, joining 3 million traders on Reddit to try and force the price of silver up is just fool's paradise and foolhardy, because there's just no way, absolutely no way that you could do that. It was doomed to failure to start with. When JP Morgan holds 600 million ounces of silver and they're on the short side, or have been on the short side, to buy more at cheaper prices, they'll just crush the individuals that get in the way. Not a game you want to be involved in, for sure. They'll let it go when they want to let it go, and they did last summer, and it was great because we had a shakeout all the way down If we go to the weekly chart, we had this shakeout, and this is when I bought in during the pandemic on the spread bets, and we know once they'd spiked it down, there was a good chance it was going to go, and they let it run last August, from May to August, and then I got out. I was in an ETF. I got out, well, I was forced out actually. The London Stock Exchange closed the fund, made 500% return, and then sat on the sidelines, kept the spread bet positions because they're in down here, and now we've seen the market trade back up, put a double top in, and it's just a matter of how far it's going to come back. It could come back to the 20 bar moving average on the weekly chart, which is the equivalent of 50 in the daily, and then in the monthly charts, the 5 bar moving average is going to be key to this one here. But you can see it's been sideways for the last, well, since September. So it is due to move, and don't dispute that, but it's not going to move until they let it move. For certain. And which is lovely when you see the long-term charts, because you know that it's seriously undervalued. I mean, in particular now, with the premiums, for sure, the real metal against the, that's the daily. Pick the right chart, Keith, and then do it. There we go. Yeah, so the premiums on the physical compared to how they're crushing the futures is staggering. It's the highest it's ever been. But again, it's easy to do when you've got the control of the futures, the paper market as it's called. Then it's very easy to do. But it doesn't reflect reality. There's no, not one bit of reality with regards to what's happening. You can't get silver for 20. What is it? They're currently trading at $26. You can't get it. You can't buy it anywhere. So again, it's once this market has been crushed and it can't get hold of physical because everybody's bought the physical, then they will have to see the price actually increase to reflect reality. But as we say, at the moment, that's the state of play. Be very careful taking on the big boys with SLV futures contracts. I mean, yesterday alone, if you traded the futures contract yesterday, this move here, let me just measure it out, so get a ballpark. Do that again. So from the high down to the low, actually I'll just do it from this, I can just see this from the high. So made that $29 down to 26 is $3. That's a $15,000 loss per futures contract if you were trading the COMEX futures yesterday. $1 move is $5,000. So very painful if you're on the wrong side of the silver futures contract. It's a lot safer to trade options, and it's even safer to own the physical. Okay, that will do it for this one. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.